It's amazing that this could actually represent a crazy day on the market. You have AMC with about 8 straight days of gains, with this last one a nearly 100% gain. Bed Bath & Beyond is rocking out up 40% in one day. And what I really want to talk about today is the crap stocks like Virgin Galactic. All the Chamath SPACs are making quite a comeback. Here's Clover Health. The numbers really aren't that bad for this company. It might be worth a look at this price point. SoFi is doing very well, a financial services company, but I'm not quite sure if its market cap is accurate. At $2.28 billion, that just doesn't seem right. Or maybe it is. Yahoo Finance has the market cap at $2.35 billion. There could be some opportunity here with such a low market cap. I find it a little tricky with the SPACs to figure out an accurate market cap. The first SPAC I bought was Stick, or now the original Bark company. I believe this was Northern Star Acquisition Corp, or ticker symbol STICK. This one was kind of interesting because last week they approved their merger. There really wasn't any action on it. I was going through the Beartooth Pass in Montana to Wyoming, and when I left the morning of the merger, there was no price action. I forgot if it was here or here, but later in the day when I got back to my computer, the price had indeed gone up, and I was like, oh, okay, and then I was going to make a video about it, but then the price went right back down, and I was shocked that there wasn't any price increase due to the merger being completed. Bark does have good revenue. I think it's over $300 million in revenue. It's fantastic. The market cap, I don't know. Some people say it's $1.6 billion, and they got it listed at $355 with Yahoo Finance coming in at no market cap yet. So that's to be determined. Obviously, I don't know how a SPAC works. But this sets up a play. I'm going to talk about a play I'm going to make, and hopefully I can do it as we progress so you guys can either make fun of me or say, hey, good move, you made money. So what happened with this SPAC being my first one I bought, I purchased it, I think the second day it came out around here. And then within a day or two, it had gone and shot up from 12, or maybe, I don't know, I feel like I got it at 11. Let's say I got it around 12. And then it went all the way through 18, and then it started coming back down. I just sold it. I was like, wow, I made about 50%. And then I was like, okay. And then I just made my money, and I called it a day. But then as it went down and down, I got the fever. And I was like, oh, man, I'll get back in about 13, closer to 14 bucks. And then we all know what happened to SPACs. The SPAC enthusiasm crapped out. And then, boom, all SPACs pretty much went down to about 10 bucks, their starting value. And so I did copy this strategy about 8 times. I had RTP, sold that as soon as I figured it out. I had A1, sold that as soon as I figured what that would be. And then there was like one for Canoe or something. I just don't like any of those businesses, so I got out. I have about 4 SPACs left, and the 2 main ones I like are Bark and FRX. So you can see that these are my subscriptions. I only have 4 subscriptions, as I've said before, and my first one was the financial savvy millennial who cranks out all this stuff that is not my expertise, but you got to stay in the game and know what's going on in the market. The financial savvy millennial was super good at spotting stocks that are just tiny, like SOS or even Tattooed Chef or something, and getting in low and having it really pop, just like Palantir. So even though sometimes I cut down Palantir, I don't think it's that bad of a company. And if you got in at 9 or 10 bucks, I mean, good on you. It's just awesome. So yeah, get in a good price and get great return. It's that simple. I think it was this video here that got me into FRX. I had already started my little SPAC strategy, which was basically wait for the pop and then sell. I wasn't that greedy, just like that first buy I got on North Star Acquisition. It's like, dude, I made a 50% in like 3 days. It was amazing, and I'm happy with that. Sold, get out. I don't even care what the company was. I think it was also, Star Peak. Made 50% on that, same thing, and got out. Now the other ones all lost about 10%-ish because all I tried to do was buy SPACs near the $10 mark, and that actually paid out pretty well. So after watching this video, I was like, oh, FRX is going to merge with Beachbody. I got really excited about that because Beachbody is a great program. It's cheap. I mean, $100, I believe, for a whole year to subscribe to Beachbody. That gives you all your P90s. It gets you Insanity. It gets you blah, blah, blah. It gets you so many things. So if you're paying $100 a year to try to maintain a healthy lifestyle, that's pretty cheap to me, and it should be pretty cheap to anybody. Now, when this was brought to my attention, FRX had already shot from that roughly $10 introductory price all the way up to $17, and I was saying, well, that goes against my strategy of buying as close to $10 as possible for these SPACs, so I couldn't buy it. But I did put it in an order for $11.99. It wasn't even just a couple days later, the price shot down, it picked it up, and I got in right here. And now, clearly down 20%. But the same thing happened with the original BARK company, or North Star Acquisition. I made about 50%, and when it came down, I got greedy, and I'm in around high 13s or 14s, and went down to 10. But why couldn't I sell? Because the company isn't garbage. It has good revenues and great potentials in the future. I absolutely love the dog, pets, whatever industry. It's fantastic. That's why I love companies like Chewy. I don't own it, but Petco, you get the idea. People will always spend on their pets, even during recessions. These companies do very well. So BarkBox, I think, is good because you have a subscription service that's giving your dog, monthly treats, which is fantastic. And also the company itself is cheap enough that it could be a nice buyout candidate. And I think a large company like Amazon would be more than happy to pay a couple $1 billion for such a small company. Now, what we saw in the past week is that this stock had gone down to its $10, fair price, whatever you want to call it. And then as soon as the merger was completed, about a day later, now it's shooting back up. Now we're back up 20%. So on 14 to 12, because I was patient with it, now I'm still down, what is that? Now 10, 15%, I don't know. It just goes to show when the mergers do complete and people get a clear picture that this will actually happen, then people will start to put money into it, much like an IPO. So the play with Forest Road Acquisition, FRX, which is going to be merging with Beachbody, comes out on June 24th. So here's the play. Barring no news in the next month, I expect Forest Road to stay around $10. And then my plan is just a couple days before, to prove a point, I'm going to put more money into this company, probably around Monday or Tuesday. I imagine many people are thinking the same thing. So we get back from Father's Day and then start loading up right here. And I think we'll see some action in here, and then maybe even some good pops at the very end of the month. Thumb up or thumb down, I really don't care, but I do think you should subscribe to Mark on YouTube if you want to see me fail or succeed coming up next month around June 24th. So with this particular play, I don't consider it investing. I consider it a trade. I'm going to get in, I'm going to get out, hopefully walk away with several $1,000s. We shall see. Worst case scenario, I overpay for Beachbody. It's possible. If you watched the video yesterday, you will know that I am in BP. I have been for several months, all the while watching the underlying commodity of crude oil go up. To make the analogy here is that if you were an hourly worker and you got a raise, let's say you're making $15 an hour, now you're making $20 an hour, there's pretty much no way you are going to be worth less now that your wage has gone up. And that's the same thing with the oil price. It doesn't matter. These companies trade with average price per barrel. With the price going up, the average can only go one way, and that's up. That's going to go straight to the bottom line, and they will either have less losses or lots of profits. In the case of BP, they're buying back stock, instituting their dividend again, and paying off debt. I think they paid off $5 billion of debt in 3 months. I can definitely see this going to 45, no problem. As I said yesterday, you go to a long chart here, go to a 5-year chart. Last time we had these oil prices, it's trading up in here, more towards the 40 to 45 area, even if you go long term. If we hit the mother load here and get $80 a barrel, you're going to be up more closely to 50. It's just the price of oil. It's that simple. Full disclosure, I sold most of those defense stocks because they had such a great run. And you know what? Sometimes you're just happy with a nice gain. So I sold Oshkosh out of Northrop and sold down General Dynamics. It's not that these companies will not go up or they're going to go way down. It's just I got a price that I liked and I sold it. If you're looking for other stock ideas that maybe I'm not so familiar with, but you want to get a beat on other areas of the market other than sloppy Joe value stocks that I pump, go to Stock Picks with Financial Savvy Millennial. I'll put a link in the description, and we'll talk to you later.